was being selected because we had been hearing a lot of discussions about what does connectivity means, and a lot of those discussions were in the for-profit context. And the board thinks that it's also important to think about that context in wider, broader perspectives for the not-for-profits, private. I'm not sure whether I use the word private, but we usually differentiate that from the public sector. So we think about connectivity for those sectors as well, and therefore we invited our researchers to work on a project on this very, very important topic. And so with that, I'm going to invite Hang to host the session.
Hello everyone, my name is Hang, Assistant Manager from WISP. It's my great honor to introduce the very last research session of today. It's also very, very last research session of 3-day research forum event as well. So we will start with a presentation delivered by Professor Michael Darvin. Michael is Professor of Accounting and Business Information System at the University of Melbourne. He has over 30 years of experience in research in different areas, including financial accounting, corporate governance, and business data analytics. Please join me in welcoming Professor Michael Darvin. Thank you.
Thank you, Han, and thank you, everybody. I know being the last one of the day, everybody's probably getting a bit tired, and I do feel it's quite a privilege because if you're around on Monday, I did the opening keynote, so I'm getting to bookend. So I don't know what that means when you get to the stage of life that you're bookending the conference. So we'll see how we go. Is this a good thing or not? I should acknowledge that the AASB did provide financial support for this work, and we really appreciate the collaborations we get to have with the AASB on the various projects that we do, and all our industry partners are very important to helping us do things that matter in the real world, and that's the sort of work that we really want to play with. So I want to talk to you about connectivity in reporting. And one of the things I like about connectivity is it really starts to emphasise this idea of how we integrate different pieces of information together to understand what's going on. What I don't like about connectivity is that we're not sure what it means. And it's one of those things where a lot of people make assumptions about what they think it means, and we get different responses. We're going to be looking at this in the sectors of public sector and not-for-profit, and in particular at climate-related disclosures, but we will be drawing out some policy implications that are a little bit more broader than that. I do have to acknowledge my co-authors and collaborators on this, so Nicole Giles and Naomi Soderstrom, and our research team of budding researchers, so Jade Chen, Arnold Lau, and Abigail Zhu, who some of you may know is also with the AASB, but these are our honours and PhD students that we've had engaged in doing industry-relevant research. It's what we should be doing at universities, so it's great to have them as part of the work as well. So let's think about what we're looking at here. What is connectivity and why should we care? One of the things I want to draw a distinction between here is this idea of connected information and more of a holistic, coherent reporting idea. So we can create linkages between different pieces of information, and we've been doing that for years just in financial reporting. If you think about when we do financial statement analysis and calculate ratios, we're exploiting the connections between different pieces of information. And we saw the insight that we could get from that. When we move to connectivity now in reporting, I think we're talking about something much bigger. It's a more holistic view of how the different elements of what we're reporting fit together to tell that coherent story. So if you're around on Monday, I talked about accountants being the original business data storytellers. And so for me, this is how do we tell a consistent, coherent story about what's going on in the entity about which we're reporting. And that consistency and coherence is also what gives the insight and the validity to that. So we're looking in creating that connectivity about the consistency and the sort of assumptions we might have. The data that we're employing, what's the relationship between the data that might fit in the financial reports and the data that's driving the non-financial metrics that we're looking at, those different measures. We're looking at how what's happening now ties into what might happen into the future. So that's another dimension of that connectivity for the storytelling that we're going to be exploring. It's about helping us understand the opportunities and the risks that the business might be facing, or the organisation might be facing, as it tries to meet its objectives. And I'll flag there that objectives is something we want to keep really much in mind. One of the things I always like about working in the not-for-profit and public sector space is that we don't have that overriding assumption of a profit motive, which I think sometimes leads us to make too many simplifications about what we're doing and what we're trying to achieve, because we know profit's not necessarily a perfect measure of future value creation and value. So here we're really starting to address that issue, because we know we've got things that are difficult to measure, so all the sort of things we've been talking about already today in terms of service performance reporting. And so it's really getting to that explanatory part of what we're doing in reporting. It's not about just the number that we're putting out there, it's giving meaning to the number. And for me, that's the key part that we bring as accountants, is giving that interpretation and meaning. So connectivity, to me, is a really fundamental concept in what we're doing in reporting. If you can't connect the disparate bits of information together, how do you know what's going on? Earlier in the day, we saw some objections to things around service performance reporting. And I think that's another issue of connectivity and coherence, because we weren't getting enough about understanding what that metric might mean in this particular context that gives you that operational view, what is good, what is bad, in how we look at this. When we start to look at this, there are some things that are motivating us, and that they also create some challenges for us. We're moving here to a much broader range of stakeholders. And so it raises that question that I mentioned in my keynote on Monday of, who are the users here? Because immediately we're looking at a much broader range of users in what we're dealing with. But fundamentally, the goals that we have in mind of reporting are very similar. Creating transparency, creating accountability, telling the story about what's going on in the organisation for whatever that purpose of that organisation might be. Whether that's a social purpose, whether it's a government purpose, whether it's a profit-making purpose. It's also picking up that question of intangibles, because so much of what we've got in these non-financial metrics are going to elements of things that are not easy to count, not necessarily tangible, but we know are crucial to values. And so how do we make sure that we don't get caught up in that criticism we always had of accounting? You guys just look backwards, you know. Historic cost, you're so tied backwards. And yeah, we're embracing fair values and everything. But I would say, look at our fundamentals in financial reporting of things like an asset. It's future economic benefits. We are future oriented. So these intangibles, these other outcomes that are non-financial are giving us information about the things that we're reporting on in a financial sense. So those are the what and whys. Our question in this research is, how does this actually apply in practice? What are the frictions here that are going to say, we don't want to do that? What are the things that, oh yeah, that'll be really good? And how are they conceiving of connectivity? I did want to say that we're drawing a big distinction here between what we're thinking about as connectivity and storytelling and integrated reporting. Sometimes they get lumped a little bit together. I think we've got to keep those separate, because in integrating reporting, you get the 6 capitals, and that leads you down a particular path. We don't want to go down that path, because I think there's a presumption there about, have you got the right 6 capitals, and having to focus on capitals that may not be relevant for what your particular purpose is. So we're going to draw that key distinction there. So sorry for the devotees of integrated reporting. Put a bit of a dim light on that one for today. So I don't want to labour our research approach and details of that too much, because I want to focus on the implications. But just to give you a sense of where we are, we adopted a mixed approach, like what we were told was the right way to do things in terms of evaluation this morning. So we did some qualitative analysis, and and we did some quantitative analysis. What we were looking in the quantitative analysis was looking at the extent to which we could see evidence already of connectivity in current reporting practices. We focused this very much on federal public sector and a sample of not-for-profit entities that we randomly chose there. This was 2023, 2022 sort of time periods. We had 164 annual reports of public sector entities at the federal level. We focused on the federal level so we'd have some commonality there, and we also expected them to be a little bit further along than some of the others. And then a random sample of not-for-profit entities looking over a 2-year period. And I'll explain what we then did to measure and think about what we had as evidence of connectivity there. Then we want to understand not just the what, but the how. And so we did some interview work, and in that interview work we spoke to stakeholders employed in financial reporting and governance roles about how they saw connectivity rolling out, connectivity particularly around climate risk reporting and other non-financial metrics. And this is where we then picked up much more of the not-for-profit and state and local government entities that we were looking at there, and trying to bring out some of the perspectives and challenges with climate-related disclosures and connectivity that would arise from that. So let's look at what we had firstly in the evidence of connectivity at the federal level and the quantitative analysis. And we created a metric of measuring how much connectivity was there. This was using textual analysis to essentially say, let's take a chunk of the text, where do they mention a financial thing and then a climate risk thing, and how close they are together, and how many times are they creating a direct linkage between what they've said about something financial and the climate risk. And we counted those in each of these financial statements and the climate disclosures that they made in this. Now, for financial year 23-24, what you can see is we didn't see very much activity here, so not a lot of connectivity. Expect that's going to change as we roll out a lot more climate risk-related reporting. We've got a couple of outliers you can see coming through right at the end there that had a lot of what was going on in that sort of connection score. No surprises, those were entities that were government agencies charged with dealing with things like climate change, natural resources and those sorts of things that would of course be doing that. And then we went and did a sample of annual reports from the not-for-profit, leveraging the data that the ACNC has on that, and we found no evidence of connectivity there. In fact, only 3 mentions of climate-related things in our random sample of things, those reports. Now, again, we're probably going to see this change over time as people report more about climate risk, but I think it tells you part of the story of what's going on and the resistance to embracing this and the reasons why, which is where the interview data starts to come in. So we then started to look at interviewing various people who were involved in these sort of reporting initiatives, what they saw, why they saw problems with it, what were their perspectives and challenges. And a couple of themes started to emerge. Firstly, in terms of scope. There was not a lot of embracing of climate risk reporting per se, as much as there was thinking about it as service performance reporting and sustainability much more broadly, because some of those not-for-profits don't have a climate element, they're much more there for a social good. Similarly, in the public sector, we're seeing a lot of entities that are involved in social good related things, not just about the climate things, so that's what's important to them. So they wanted a broader view of what was going on. We saw materiality rear its ugly head, as it has, I think, on a regular basis, about every 20 minutes over the last 3 days. I think someone mentions materiality. I know Tom Frick's smiling there. We know about materiality, and we know it in the way that we don't really understand what materiality is, but it's a central concept in what we do. So there's a lot more that's going on here. And I think when we start to think about materiality, it's thinking about our purpose and the context of what's going on. One of the things that came out here was issues of regulatory burden, particularly in the not-for-profit, but even in the public sector, that regulatory burden. And that led us to the question, well, why would you mandate climate risk reporting and mandate creating connections between that and your financial reporting And the short answer that you can come up with is, well, we're doing this so we can change the behaviour of organisations so they're more climate aware, they're more sustainable in what's going on. But that's where we found some interesting things in this sector, because the public sector individuals kept telling us, well, you want to get something done in the public sector, the best way to do that is by ministerial directive, right? So we're not using the reporting to motivate the action, we're now only using the reporting to monitor the action that the minister has already directed, and there's nothing stopping the minister putting in the metric that they want that might go on that. In the not-for-profit sector, we're driven by our purpose, and then it's what the purpose that we might be wanting to meet, those donor expectations and the people that we're providing that social good or whatever service we're providing to that is driving that, which may only be remotely or tangentially related to climate. So I spent time on the board of a large disability service provider. I can guarantee you everybody on that board was really concerned about climate, except when we're looking at what we're doing in this organisation, because it didn't matter to the purpose. Yes, that meant that all other things being equal, we'll buy recycled paper, we'll think about our carbon footprint in travel and everything like that, but we're more worried about, are we delivering the disability services that are changing the life experience of the people with a disability, which was what our purpose was. And so if you mandated reporting in that organisation, which had a $25 million turnover, so it's large, so it would get hit, we'd say, oh my gosh, we have no trouble meeting the financial reporting requirements without having to worry about sustainability reporting. So that cost-benefit issue comes in just because the problematic resource constraints. And to give you an indication of some of the issues you might see there in size in the not-for-profit sector alone, sometimes you have large organisations that might have very small finance teams. They just don't have the resources to do this. And we're taking away from the purpose that they have. Similarly in the public sector, they're there to report or they're there to deliver the service. So that behaviour change mandate seems to disappear, which changes then the tone of what we want to say here. So let's get into some policy implications, then I'll wrap up quickly with some quotes. What that led us to think about was really, in this sector in particular, it's maybe not about mandating things, it's about developing guidance. Guidance that can then be used as the exemplar of saying, here's how you can report about these sorts of things in meaningful ways when you do, and why this is good, what the challenges and issues are, so we can deal with that. That's thinking about connectivity very much as the storytelling, and it's tailoring that guidance to the risks that the entities might be facing, so public sector risk management, or things that are much more aware of the purpose of the organisation at the not-for-profit level. And so what we really want to be seeing developed there is not so much give us a new standard, but give us some educational materials that can inform how we can improve reporting. As I said before, the size of the finance teams vary greatly in some of these organisations, so think about who the stakeholder needs are. Who's the user of these reports? What do they need? And let's think about how we might tailor and tier the structure of those reporting requirements. And what we're really bringing out there is a bit more of that connectivity as connected information, which to me is the little less interesting part. And so let's not, again, regulate that too high. Where we want to go, I think, is back to that connectivity of storytelling. And this is where, when we spoke to people both in the public sector and in the not-for-profit, they were thinking much more about all these climate disclosures and sustainability reporting fit much bigger and much better as part of a broader understanding of service performance reporting and how we tell that story. So how do we then subsume that and connect that into that to develop a holistic, coherent and purpose-relevant reporting of connectivity, and to support how we engage with our stakeholders through that connectivity, because some of the stakeholders here aren't going to be able to read the financial information. They're more interested in the social impacts that the organisation might have. So how do they then connect that to the financials to understand why the organisation was resource constrained and couldn't do what it was trying to do in a particular setting? So I'm going to reveal some of our data just as a final part here. How were they conceptualising connectivity and what did they see as the challenges? So these are from our different interviewees, just a sampling here. Connectivity is risk management and the impact on going concern in the future. You know, the sustainability of entities or the sector. It's telling the story about the future. That's a key part. So connectivity is helping us project into the future. Not so much now about earnings, but about the viability of the organisation to continue delivering the services that it does. We want a good balance of both financial and non-financial information, some linking back to financial statements. Where that happens, we should explain it, but don't force the linkages. Some financial things and some non-financial things don't necessarily connect. It's telling the story. It's judgment. It's subjective. If all you've got are the narrative disclosures in your sustainability report, but it's not quantified as impacts on your financial statements, that's basically marketing 101. So we're just doing greenwashing, and we shouldn't be doing that. Telling the story. So connectivity goes to that issue of the reliability and validity of what we're reporting on. In the same way, when we look at financial information and we do a ratio analysis and we can identify, hey, somebody's playing funny buddies here because the ratios don't look quite right, I think they've done something to cook the books a little bit. Connectivity helps in that way here as well. There are challenges. We've got a broader range of users. Who is the user is a question I don't think we have good answers to at times. Do those users have the capability to understand this information in the not-for-profit context, even in the public sector context? I'm hearing, well, we have to present this simply so the minister will actually understand what's going on, which I've seen in different contexts like leases where lease accounting, for example, doesn't work. There needs to be clarity of the objective of reporting. Who are those users? What are the needs we're trying to support for them? What is the value proposition for reporting about the things that we're reporting at? It's to tell the story consistent with that purpose. And so social impact measurement in some cases may be more important than climate risk. Having one word for materiality that applies to 99 different concepts, depending on how you view it, is one of the challenges here. So, gee, we all learnt materiality in year one of accounting probably, and we still don't know what the hell it is. That's what I love about this sort of stuff, is it's going to bring out the discussions we need to have about that. And to sort of bookend my comment from day one, the tricky part about sector neutrality. So maybe we need to think about sector neutrality in a different way. Thank you very much.
Thanks, Michael, for that very insightful presentation. So now I will introduce each of the panel members who will be joining us on stage. They will be introduced in alphabetical order based on last name. Could I please introduce our very first panel member? He traveled over 17 hours with his team from Seoul, South Korea to be with us today. So Dr. Hyung-Jun Chu, could you please come up and join us? Hyung-Jun is the head of the research at the Korean Accounting Institute. He brings both academic experience and also practical insight from his time working at PwC as well. Our second panel members, Amir Ganda, please join us. Amir is a reporting and assurance leader at CIANZ. In his time working at CIANZ, he had to shape the professional vision and define a lot of the policy matter for chartered accountant. He also represents the profession in different outlets around the world as well. And finally, may I please introduce to everyone, Kate Griffith. Kate is the Executive Manager of Research and Policy at the Australian Council of Superannuation Investors. Previously, she also working as a head of Governance, Risk and Audit Committee at BHP. And the session will be moderated by Kim Carney, WISP Senior Manager. I will now hand over to Kim. Thank you.
Thanks, Hung. And good afternoon, everyone. I think, similar to your point, Michael, my job is a little bit tricky because I'm standing between panel members and our audience and networking drinks and perhaps an early mark, or as Kate pointed out, perhaps finishing off our emails that we've missed when we've been sitting through the other sessions today, learning lots of new things. So I'm really excited to be here talking about connectivity, which I think is particularly topical at the moment. And Michael, you set me up beautifully because my very first question, and I'm going to ask each of our panel members in turn, but my first question is around what connectivity means to you, because I think you're absolutely right that it means different things to different people. And we've got a great panel in front of us today. So Hyung-Jun, if I could start with you and get your perspectives, please.
Well, before joining Korean Accounting Standards Board, I was the academics, and then whenever I taught the valuation, it was very. I used very simple words that we discount the future cash flows, and we need to take a look at what kind of things impact our future cash flows. And then connectivity means that when we forecast future cash flow, we should include many factors, not just financial ones. We need to take a look at non-financial ones. So it was easy to talk about connectivity for the stock valuations or for-profit entities. But as for non-profit entities and the government and public entities like this presentation, it's getting much bigger. The picture becomes much larger. And when we talk about connectivity, it means that there are so many stakeholders related with those entities, and we need to take a view from those stakeholders, which means that so many informations are needed to take a look at how these entities run. And then, well, as for the public entities, it's very interesting because public entities can be related with anybody in the world. If you talk about Australia, then more of the Australian people will be related with the government agencies. So, well, when we think about connectivity, all information, then the question is how much information should we include in the realm of connectivity? Well, that's a very interesting question, but at least we need to improve the financial reporting through the connectivity. So I view connectivity as one way to improve the financial reporting. But as for non-profit, that's very tricky because non-profit entities have a very different, diverse, sometimes exclusive, sometimes non-exclusive group of stakeholders. So it's very tricky. So maybe next question will address that kind of thing. So I'm going to move on. Yeah.
Amir?
Yeah, look, I think it's certainly becoming much more important as the diversity of stakeholders and the diversity of information that we're producing grows. One way that I look at connectivity is that what really brings it together is the perspective of the user and the preparer of the information. So for a business, that's business strategy. And we talked a lot about that at the dinner last night. From the perspective of the user, if we're thinking about a for-profit entity, that's, we can think about an investor, and the financial capital does tend to trump other considerations. And as Professor Davin mentioned, in a not-for-profit organisation, of course, the purpose and the core services trump that. I think one of the real challenges is there are now many other stakeholders and demands from society and regulation and law that are coming into this. And in some ways, it's a little bit like when you're watching, a TV series and you notice that there's a reason why they had to write that character in. Or maybe one of the actors came about an accident and they had to somehow come up with a way of getting it. That's a little bit like that. So you can start to end up in a situation where you've got the core, what really is central to both the organisation and its stakeholders, and then you've got other things that you're trying to meld into that story. I don't have an answer, but I think that is one of the really key challenges we're facing.
Thanks, Amir. And Kate?
Thanks. Do I need to?
Yes,
turn?
please.
It's on?
Yeah.
Good. Look, I come from a slightly different perspective, I think, to the rest of the panel. The Australian Council of Superannuation operates to help its large investor members manage their ESG risks in their Aussie listed equity portfolios. So we help our members do that really as users of the sorts of disclosures that we're talking about. Having said that, our members are going to be preparers for the climate-related disclosures as well. So we've kind of got that dual perspective. I think I'd start by making the observation, and I think that was made in the research as well, is if we can spend hours talking about connectivity, if we can do lots of research on it, there's the opportunity, right? There's the opportunity for the standard setter to perhaps provide some guidance in this space. Probably the AASB people in the room won't thank me for that comment, but nonetheless. But also, I think in terms of connectivity, to take a step back and think about climate reporting not just as a disclosure exercise, but think about it as a strategic exercise for your organisation where you can have a look at those risks and opportunities and how they might affect your business going forward. And that's really the key from our perspective in terms of the opportunity, but also the information that you're going to provide your users. So connectivity is actually part of the bigger strategic thinking and not just thinking about it as a narrow disclosure exercise.
Thanks, Kate. I can see lots of nods from our panel members, so lots of agreement there. Michael, was there anything that you'd like to add?
Look, is there one on? Yep. I think one of the things that I see here, you reminded me there about some work we did a few years ago for CPA Australia on decision usefulness. And what we were finding there was investors were very much wanting to understand what's the future stream of earnings. So we look at earnings now, what's the persistence of that earnings number into the future? And I think that's where we start to see the connectivity happen in the corporate sector, is it's giving you that information to understand how those opportunities and risks in various forms tie to that earnings number, so you can project the likelihood of seeing that earnings number persist and what the future opportunities and risks facing that organisation is. So you're connecting the financials to that. So I'd agree. I think it's very central to the storytelling, whether that's from a strategic level for a for-profit organisation or more about a purpose or objective for a not-for-profit.
Thanks, Michael. Hoon Chin, my next question is for you, please.
From me. Okay.
So picking up on one of the points that Michael raised in the presentation was this concept of sector neutrality, I guess. So I'm just really keen to hear from you on your perspectives on some of the challenges that you may want to share with us around applying sort of sector neutral standards across sectors with different purposes and objectives, please.
I had a chance to talk with some people in the non-profit entities before taking a flight a few days ago. And one person working for the international agency fostering sustainable tourism told me that, okay, they believe in sustainability and they are acting for sustainability and they do not know how to report sustainability. So, okay, then I talked about that. Okay, they said, all right, it's getting better and better, but how much of our activities should be included in the reporting? So how much of boundaries, how many activities, how many related parties should be included in the reporting? That was a huge question. And the next one, another one, I talked with someone in the food bank, and then the guys told me that we just get some donation from anonymous people and buy some food and then distribute them. It seems like we just act by ourselves, just 5 people here. Then what is our boundary? Just 5 people is enough, isn't it? Then said, okay, so it means that different entities has different definitions of boundaries, and maybe we need to allow more flexibility in define the boundaries. Just like Professor Devon talked about some flexibility in the materiality and the mission diversity, narrowing down and using the same measure for every entities can, it's gonna fit very well because our non-profit entities have very different operations, very different missions. They just don't have same missions, just like make the money in any way. They don't act like that. So I believe that we should be more flexible, and we should allow some imagination in drawing the line and report some different information in different ways. Yeah, that's my takeaway from my interviews. Yeah.
Thank you. That's really interesting. And Amir, maybe a question for you. And Kate, I'll also throw the same question to you as well. But picking up again on another point that we've heard a couple of times, it's around this need for guidance, It's the need for support, particularly in some of the not-for-profit and the public sector where entities are less well-resourced and perhaps don't have internal knowledge and things like that. So I'm just keen, Amir, I'll start with you if that's okay, but I'm just keen to understand your thoughts on this and what you think some of the possible solutions to this might be. Obviously, the ISB are expected, they've got some guidance coming, whether you think that might help, whether you think there's something else. Keen to hear your thoughts.
It's a really important challenge, and it is as much a resourcing challenge as it is about understanding and guidance. And no amount of guidance can make up for a lack of investment in the resources needed to have proper integrity and proper financial governance within any entity, and suited to the size and nature of the entity, and sometimes maybe in different organisations that are very constrained financially, that's not given enough attention. I mean, if anyone who's ever volunteered in a not-for-profit, Professor Davins nodding vigorously, would know that you're very stretched. It's even a lot harder than in a for-profit entity justifying that, the sorts of things that we get up to as accountants. But having said that, yes, there's a huge role for guidance, and not just guidance of the sort of usual ilk, but guidance that's really presented in a way that's understandable and implementable in plain language, simplifying some of these very complex contexts. And then I think, to the point made earlier about strategy, bringing the guidance and the storytelling back to core strategy and the stakeholder perspectives, so that it's not just something you're adopting because you think it's good to do or because you think you have to from a compliance perspective, but you're actually able to link it right back to the things that really are top of mind for the board, your stakeholders, and the organisation.
Thanks, Amir. Kate?
Yeah, look, I find it really interesting. I mean, I do think that if we go with sector neutral standards, then there is a role for guidance that has some authority as well. So I do think there's a role there. I think there's also a materiality question here that we're talking about. And you said earlier that we've mentioned materiality every 20 minutes, but to take your small not-for-profit example, if climate risk is not going to have a material effect on its ongoing viability, I would suggest then it's not a material risk, and take that strategy step back. Maybe once you've done that analysis, the question stops there. It's quite different when there's a material risk that affects the ongoing strategy and viability of the organisation. So, it does require a wholesome assessment, but, I think materiality is a key concept here. My final point, I guess, in relation to the specific question is what can we do about this going forward? I think there are some good proposals at the moment that Treasury has put out some draft legislation that does start to touch on a couple of these things. So to the extent that those in the room haven't looked at those, I'm sure you all have, but that there is some detail about taking into account the effect of different sectors and the ability for those new boards to be able to do that and to have the right level of expertise, but also really importantly resourcing to be able to deliver that guidance.
Thank you.
One thing about the guidance.
Absolutely.
Yeah. Well, having really good guidance could be very helpful for any kind of entities. But what I'm very afraid is that any kind of guidance could be accepted as a kind of boilerplate, or looking good way particularly for non-profit entities. So sometimes I think that, okay, we have guidance, but we also need to allow or encourage to report that they are not, to report that they are not doing or they are not following the guideline. Sometimes just giving some null information could be a good way to show the entity's activities. Because I'm very afraid about that because particularly in Korea we have some scandal about the non-profit entities which overestimated their performances and they overestimate their strategy. Well, there was voluntarily some discretionary activities, but if we have a guideline, there could be a standard for normal people, donors, and every entities should be compelled to follow the suit. Then that's gonna be not easy situation for many entities. Then, well, that's gonna be a problem. Yeah,
Thank you. We've got a question that's come through from the audience, and the question is, and I'll pose it to all of our panel members, but it's how to define connectivity if we're not clear who the users are for the public sector and the not-for-profit sector. So, Michael, maybe I'll start with you because this was something that you raised during your presentation, and then I'll make my way down the line.
I think the key question is finding out who the users are, because you can't. That should be the start of the process, right? Who are the users? Who are our stakeholders? And I think thinking about your stakeholders is a complex thing. I've been teaching at Melbourne a first-year class in sustainable commerce where we've introduced the idea of stakeholders, and I say, look, I'm an asthmatic. There's a coal-fired power station in Albania that is pouring out smoke. Fiction, but let's play with this. Am I a stakeholder of that organisation? It's clearly impacting me, but probably not. Now, if I fly to Albania and stand there out the front of the plant with the flag saying, "Stop killing me," I've now become a stakeholder. And so I think as we start to think about who the stakeholders are, that feeds into who the users are. And sometimes we want to make sure that some people don't become more of a stakeholder and cause us a problem. But I think let's define that more broadly rather than more narrowly, because that's another risk in itself. But defining who the users are becomes really important. And I know in financial reporting we've tended to try and narrow our user base over the last 30 years, and that makes sense because you get clarity, but then we lose the value of what we're contributing to the broader group of stakeholders. And I think that creates a lot of challenges for materiality, for audit, and everything else.
Thanks, Michael. Kate, I might pass to you as a user and just see whether you've got any thoughts, please.
So this is one of those questions when I think about as a user and our members, they're large investors. It's reasonably clear they're pretty sophisticated, they're providers of capital, which of course are the superannuation dollars that we all around this table invest. So there's pretty clear and important duties there. That's almost the easy question. The more challenging question, and we see it sort of in the not-for-profit, we see it actually with my members as reporters as well, is that there'll be a different level of sophistication from the users. Having said that, a clear definition, starting with a clear definition of who your users are, and your users might be different to your broader stakeholders, and that's okay. You might do a different report for your broader stakeholders. You might have different engagement processes for those stakeholders. To my mind, it's actually about thinking those through and understanding them and then responding appropriately, and perhaps even explaining why you've responded in a particular way.
Thanks, Kate. Amir, if I could get your thoughts as...
Yes, I'll try to be brief because we're running out of time. But
we've got a big red clock.
A couple of points. Not all the users read the information or need to. In fact, I'd argue most of them don't. And if we're all those superannuants, then probably not reading all those statements. But the financial governance and transparency and integrity that's brought by all of that is something we all rely on. The second point is, of course, the story, as was mentioned, changes depending on the user and what they're interested in. So I think if we're talking about connectivity and integration, it's also important to think about how the user is able to disaggregate the information and consume it in their own way. So that's where I'll circle back to a plug for digital reporting and XBRL, which is really a technology that's designed to help enable that.
Thank you. Woon-Jing, was there anything you'd like to add?
Yeah, the diverse group of stakeholders we may or may not take a look at the financial information, also connected information, and yeah, meeting the demands from those various groups could be a very huge challenge for public entities and non-profit entities. And sometimes we need to take granted that sometimes, not always, sometimes we need to take granted that we cannot satisfy everybody, sometimes. And we should find a way to satisfy those who ignore through that cost and benefit process. Because as Professor Devon told, yeah, sometimes some entities have a very limited number of staffs for financial reporting, and it's not going to be easy for them. So we should be very flexible, just like what I talked about the maturity and the random of stakeholders. We should be more imaginary sometimes. And the question is whether the regulatory bodies or some group of donors would allow such flexibility. That's the very big question. That's it.
Thank you. We have run out of time, unfortunately, but I just would like to say thank you to our panel members, I think, and obviously Michael for the presentation also. I think there's some really key things for everybody to go away and think about, some of the key takeaways about who are the users, that we don't need to communicate the same information for everybody, that there is ambiguity around what connectivity means and the effects of that more broadly. So that's it from me. Thank you again, and I'll now pass over to Eric.
Okay, it's the end of the Research Forum, 2025 Research Forum, and I'd like to reiterate that the Research Forum started in 2016, and one of the founding members was actually Anne. I'm not fishing for validation, but Anne, do you think we've done better? Thank you. So for the closing remarks, I'd like to invite our Chair, Dr. Keith Kendall, to provide the closing remarks. Welcome.
Thanks, Eric. And just following on from that last question there, Anne, I appreciate you not saying that the original is always the best. So, look, I'd like to, first of all, thank everyone for coming today, including, and the previous 2 days, including those that are attending online as well. Thank you very much for our speakers, our keynote speakers, as well as our panellists, and in particular, our presenters, who today presenting their work that they've been doing, assisting the AASB with our work program. And well, I'd certainly like to think everyone agrees with me that there's some very interesting work being done, and if anyone does work out what connectivity means, can you let me know sooner rather than later? It's certainly one of the things that has been on our mind. And also I'd like to thank those who have had to travel to be with us, particularly those from overseas. But it's always terrific to have those of you that are able to come and be in one place. I think COVID demonstrated the value with being in the one place and being able to have that face-to-face interaction. So it's really good that those of you that are able to go to the effort of being here in person. So thank you again for that. So like Eric said, that wraps up our research forum for the year. Next year will be bigger and better again, so not putting any pressure on you, Eric. But on that note, I'd like to also add my thanks to the AASB staff for having put on a terrific event, and in particular Eric for having run the show, and really doing us proud and a good way to end 2025 as far as our research program goes. So with that, I'll hand back to Eric to close out the event. Thank you very much.
So certainly we can be successful because of the chair and the board and our staff and my colleagues too. So we are going to have drinks right now. The drinks will be served right outside of the room. And that's it. See you next year. Thank you for coming.